7:35 on a big show clock, being brought to you by Hertz Real Estate Services, farmland auction, brokerage, and evaluations. Big thank you to the gang there at Hertz Real Estate Services. Well, let's talk markets right now. Get going here with Brian Hoops, Midwest Market Solutions. Brian, we're watching this corn and soybean market, kind of mark time, really. It's not doing a whole lot. December corn's down, 2-3 cents today. November beans down 5-6 cents. So what's the general market sentiment right now?
Yeah, Bob, hi there. Good to talk with you again. Yeah, we are down today. We rallied yesterday pretty sharply in corn. The funds stepped in. We're big buyers, around 18,000 contracts of corn, and that helped the bean market to move higher as well. So we made new highs for the move, but today we're setting back a little bit. That fund buying has not showed up again. So maybe a lack of export demand is probably catalyst to this. We thought we traded yesterday maybe these harvest delays that are coming because the rains that are falling in the western belt and across Iowa. So a lot of producers are knocked out of the fields, but we're going to see, I think, a little bit more harvest pressure against some of these values, and we're in kind of a trading range, but at least it's an upward moving trading range. As I said, we made new highs for the move in soybeans yesterday. Corn made new highs. In fact, corn took out the highs from July the 18th and entered into that gap area that was left after the 4th of July. So we erased all of July's losses and the August losses and have turned it back into positives here. So we're back into more of the middle range of trading throughout the entire year. We haven't had a big range this year, and we're right back in the middle of it during the early stages of harvest when we're combining record corn and record soybean crops.
Well, yeah, maybe I should have asked this question. Are you surprised we have held values like this? I mean, we've been above 430 now, December corn. We've been, pushing 452, 53, I guess, November beans. That's not where we're at right now, but we have seen that.
Yeah, we kind of put those lows in the month of August. We've seen lows the last couple of years come earlier and earlier. It used to be kind of, September, October would be our lows, and then maybe 10 years ago it kind of moved up a little bit sooner into early September, and now it seems like August is when we're putting those lows in. And it has to coincide with the supply and demand report that came out the last couple of years in August. USDA really pushed yields last year and again this year, jumped those corn and bean yields, and I really don't think the trade bought into those yield numbers. Now, USDA did back off here in the September report, the yield numbers. They may have to back off more because some of these yields that we're hearing coming out of the fields are not anywhere close to matching up with what the USDA had to say. They're maybe more mirroring what the Pro Farmer Tour had to say, and especially if you did not treat your corn this year, if you didn't put a fungicide down, you're going to see significant yield drags is what we are hearing from clients and producers around the Midwest.
Yeah, I think I said 4 something for beans. That's a 10.52. That would have been a huge hit. 10.50. Brian Hoops going, wait a second, $4.50. When did that happen? 10.52 is our high on that November bean contract. So you're close to wheat country in some of your areas. What's going on wheat-wise?
Well, contrast to the corn and beans, which have retraced and rallied back to middle of the year gains, wheat is still sitting near its doldrum prices, near contract lows that were set just last week. So we bounced off of it a little bit, but they are planting in the southern plains. They're getting some moisture through this last week, and then this week we're getting more moisture in Kansas and Oklahoma, and they're going to plant not a lot of crops. From what we're hearing from clients is they're probably backing off on their acres a little bit, and they're certainly backing off on fertilizers. You look at the price for wheat in the $5s, $5.10, $5.20, they just don't want to put a lot of money invested into that crop. So they're going to plant something, kind of break up the rotations, but as far as putting herbicides, fertilizers down, they're going to back off of that this year until they can see next spring how the crop comes out of dormancy, see what prices, if they've done anything to encourage them to put some late season fertilizers down. Otherwise, this wheat market is just sitting here near the bottom of its trading range and hoping to get some sort of buying interest. But you have all these other world countries, Russia, the Ukraine, Argentina, Australia, all going to produce more wheat than what they did a year ago. Canada's going to have a bigger wheat crop, and all that competes with the U.S. on the world export market.
Well, let's talk about South America right now. We're in planting season. What are you hearing?
So, yeah, they're just getting going on some of their planting, and there's, still estimating last year's crops. Now, they're going to probably plant a bigger crop this year than what they did last year. And, of course, last year it was record large type crops in Brazil and Argentina for both corn and beans. They didn't have much of any type of a hiccup in their growing production. In fact, last year's soybean crops now estimated about 170 million tons, and exports are about 109 million tons. That's significant because last year Brazil exported about 98 million tons, so it's almost 11 million more hitting the world market than what they did a year ago. And coincidentally, China normally buys 10 to 12 million tons of soybeans from the United States. They don't need to buy anything this year because that South America crop is large enough that they can buy everything from Brazil that they need.
Wow. Well, Brian, we're going to let you go for an hour and 10 minutes and come back and maybe talk some targets moving forward. And in the meantime, folks want to talk markets with you. How can they do that?
Yeah, you can reach out to me directly. Phone number is 417-501-5132.
Fun. We speak farm. This is the Big Show.
We're speaking farm right now with Brian Hoots, Midwest Market Solutions. And Brian, let's talk a little bit about what's going on in the marketplace today. Corn and soybeans rolling back a little bit as that roller coaster ride continues as well. What's happening in the grain and soybean market?
Well, I think the market rallied last couple of days anticipating this rain or factoring into prices, some harvest delays, and now we have those harvest delays. So market is looking for the next direction. It looks like maybe we're going to dry out enough to get that harvesting going once again. So we're seeing a little pullback in prices. There just isn't that much news really for the markets to trade off of. Hopefully things go well with President Trump and Xi on Friday, and they can reach some sort of a trading resolution. But the market's really not anticipating that we're going to get a final trade agreement reached, and you can see that in prices as we set back from these recent highs that we've seen. So we're more of a sideways to slightly higher trading range going on, and I think as we get more into the harvest season, we'll uncover some more fun buying, but it seems like that fun buying happens when we get into some price weakness in that 416 to 422, 23 area in December corn.
What are you looking for over the next couple of weeks then, price-wise, December corn, November soybeans?
Yeah, I think we kind of stay in this trading range, 416 on the downside for corn, and maybe we go and fill that gap up to 433, 435 before we run into a lot of resistance. The soybeans, a little bit broader trading range, a lot of support down at 1023, about 20 cents lower than where we're at now. And you would think that maybe 1065 or so would capture any upside moves that we have until we get into a little bit later stages of harvest. Maybe we get some better export business.
Let's talk about what's going on in the cattle trade. You talk about a roller coaster ride. The roller coaster is moving downhill today. Live cattle, feeder cattle, what are you seeing?
Well, we are seeing a little bit of bids in the southern plains starting to develop. Trade last week in the north and the south finally went to par. It had been premium for most of this year. Bids are servicing at $239 this week in Kansas and in Texas. Asking prices are $242, and most likely we're not going to see that $242. It's going to be closer to $239 to $240, more of a steady to slightly lower type cash trade this week. We think the boxes have peaked and will turn lower here for the rest of September, holding the cash markets down. It's going to give us a very choppy trade in the cattle futures. We've seen a drop in the cutouts, $23 from 2 weeks ago, and that's going to translate into softer packer margins and lower cash trade. Nice thing is, at least the futures market really has anticipated this softer cash trade already, and we're not falling farther than what we are with a couple dollar losses today.
Hey, Brian, folks want to talk markets with you. How can they do so?
You can find a list of our offices around the Midwest at our website, MidwestMarketSolutions.com. You can give me a call, 501-5132.